out there in podcast world? I hope you're having a great day. You're listening to Service Business Mastery Podcast. I'm your host, Tersh Blissett. And on today we're recording this. We're live on Facebook, but we're recording this, and it is tax day. We got the extension, but today is the end of that extension. And it's fitting enough, we're going to be talking about the IRS. And as a small business, what do you do if you get the letter from the IRS, or how do you handle those types of things? And today we have the resident expert, Ben Golden, with Golden Tax Relief. And we're going to talk about I think, what did you say before we got started? The 3 most feared letters in the alphabet.
The IRS. That's right.
Welcome to the show, Ben.
Thank you for having me today.
Yeah, man. So tell us a little bit about you, a little bit about your background. So you have, not only are you an expert in what you're doing, but you also have a construction company. So if you're a service business owner and you're like, yeah, well, these guys, they're just sitting in offices and, they don't really know anything about construction work and stuff like that. Well, Ben just happens to know a little bit about construction also. So that's really helpful whenever you're asking questions, and it makes it relevant too. So anyways, long intro. You give us a little bit about you, your background and everything.
Yeah. So I owned a mid-sized accounting firm in Florida, and I sold it, and I bought a railroad construction company back in 2014. And I've been been working with them for 20 plus years. But we bought that company, and a couple of years ago, I decided to open up the tax resolution company because, my passion has always been helping people with tax problems. I personally have had tax problems, and that's why I'm so passionate about it, because I was bullied, and I was bullied as a professional. So because of that, and because of my experiences, and I've had other experiences where my tax identity was stolen, and because of those experiences, I just want to help people, because I know I can only imagine how terrible it feels to have the IRS come and, start asking you questions and start, wanting to know all of this information, and you don't really know what to do. Mm-hmm. So I've been on that side of the table, and I don't want people to have that feeling, and that's why I do it.
Yeah, that's cool. And so there's 3 different people you were saying that can represent you, and can you explain those 3 people when it comes to the IRS?
Definitely. So representation before the IRS means that you get a professional to help you, and they talk to the IRS on your behalf. So you don't have to personally talk to the IRS. And there's 3 different individuals that can do that. One is a CPA, certified public accountant. One is an enrolled agent, and that's what I am. And the third is an attorney. So as an enrolled agent, I'm the only licensed person in that group that is licensed by the IRS to represent before the IRS. And then I can also represent in every state of the nation as well.
Okay, cool. So whenever we get a letter, if we get a letter from the IRS, I've heard way back when that it was almost better to have messy records versus having clean records when it comes to that, or is that the exact opposite of the truth?
I personally think it's the opposite of the truth, because the burden of proof on any deduction is the taxpayers. So, if you want to take a deduction on your personal tax return, let's say for a charitable contribution, you have to have a receipt for that. You have to have proof that you have the right to take that deduction, and it's your burden of proof as a taxpayer to get that deduction only if you have the receipt normally. Now, I've done a lot of audits, and we definitely don't have all of our receipts when we go into audits, and we know that, and there's ways that we can mitigate that problem. You just make sure that you go in knowing the problems, and what are the risks and how do we fix those risks. It's just like, when you go up to a job site, you have to know what the scope of work is that you're trying to do.
Yeah.
Same way with the IRS. When you get that letter, it's going to pretty much tell you what's the problem, and then you have to figure out the scope of work on how to mitigate that problem. How do we fix the problem moving forward? So it's absolutely no different from that perspective.
So on that thought process, uh, does a credit card statement work, or do you have to have the receipt, each one of the receipts from
A
on?
credit card statement does not work. And let me tell you why.
Okay.
Let's say that you go to a convenience store
Mhm.
and you get $45 of gas, and then you go buy a carton of cigarettes. Well, the gas may be deductible, but we know that the cigarettes will not be deductible.
Yeah.
So when you see that credit card statement for $70 or whatever the number is,
Yeah.
the $70 doesn't tell you what's in that receipt, what you actually spent the money for.
Ooh, yeah.
So in that case, the $45 of gasoline is deductible, but the cigarettes definitely are not.
Gotcha.
So make sure you keep all of your receipts. And the easiest way to do that is if you're out in the field working and you're an owner and you're a one-man show, or you've got 2 or 3 guys that work with you, take a gallon-sized plastic baggie with you and throw all your receipts in there every single day. And then once a week, just take that baggie on the inside of your house or office or wherever it is, and boom, you've got all your receipts. The reason you put it in a plastic baggie and you take it out of your truck pretty often is because those receipts fade in the sun, number one. And then number two, everybody's work truck is where they live and eat and do their work in the whole 9 yards. So, you don't want to spill something on it and then all your receipts are out the door. So that's why I say use a gallon-sized plastic baggie.
So how about this? Whenever, so like sometimes I'll go out and buy lunch for the guys, but I don't actually buy myself anything. So I'm running through town. I'm like, hey, y'all, I'll pick y'all up lunch. They're going to basically work through lunch, and I just pick it up fast food and give it to them. Is that still the 50%, or is that can you fully write that off, or how does that work, or no write off at all?
So you've got to look at it several different ways. Normally, if it's for business, on the back of that receipt, you've got to write who you met with, what you did, the whole 9 yards to make it
Mhm.
um, deductible. Number one. Number two, if it's for the convenience of your employees or the convenience of you as the employer, and you want them to work through lunch, and you just buy their lunch and say, hey guys, eat on the tailgate for 10 minutes and then go back to work because we got to get this thing done. It's about to rain.
Yeah.
That's going to be deductible 100%. So you want to make sure you write there again on the back of that receipt saying why you did that in the whole 9 yards, because if you don't, a month from now, you're not going to remember that.
Oh yeah. You won't, heck,
You're just going to look
4
up and
hours
you're
from
say,
now, I won't remember that.
you're going to look up and you're going to say $80 from Sonic. Why did I do that? So, especially 2 years from now, when you get audited, or if you get audited,
Oh, yeah.
if you have that information on the back of that receipt, and that comes to this right here. If you get audited, is the IRS going to want to see your receipts? And the answer is absolutely yes.
Oh, yeah.
Absolutely yes.
And how long out can you be audited?
Normally 3 years, but
Okay.
it's 3 years from the date that you file your return. So if 2019 gets filed on 4/15 of 2020, it's 3 years from 4/15 of 2020.
But if it's September
But
of 2020,
that's right. But if it's September of 2020, then it's 3 years from September of 2020. That's another reason why everybody should not file that extension.
so what is the benefit of filing the extension, other than if you didn't have the money and you knew you were going to owe money? Like what if, like, for us, we typically don't owe money. We even get refunds back.
Mhm.
But there's a extenuating circumstance for us, so we always have to file an extension. And I want to see if you even mentioned this kind of
Yeah, we live in the world of procrastinators. So, I
guilty.
mean, that's really why a lot of people extend. They just want, oh, I need a couple more weeks to get this, make
Yeah.
sure I have everything. That's one reason. There's also in the tax communities, a lot of people say if you extend your tax return, then you have a greater chance of not being audited because they're going to choose audits based off of the people that file the returns first.
Mm.
I don't agree with that. I think you have the same opportunity to get audited if you file in February as if you file in August. Now, if you file late, you have a greater chance of being audited.
Mm.
So make sure you file those extensions. Make sure you file timely. It's
Okay.
really important.
And so, can they still file extension today?
Oh yeah, today's the day. Make sure you file your extension for personal. The due to the coronavirus, the tax return due date was 4/15. It was moved to 7/15. So yeah, definitely.
Yeah, I on 4/15 I looked at my or the I think it was like TurboTax or something sent me a notification, hey, today's the day, or something to that effect. And I looked and I was like, oh crap, I didn't file my extension. And then I remembered on January I had already filed the extension because I knew that. So we have the K1s, and so we have another business with a business partner, and so we have to file extensions because of all of his real estate.
Yeah.
And so we can't file until everything's filed from his end.
Right.
So it makes it so that no matter what, we have to file later in the year. And so that's always a tricky thing, especially whenever personally, like I think we tried refinancing our house a couple years
Oh wow.
back,
Yeah.
and it was in the middle of the year, and they were like, we need your taxes from last year. And like, well, we had to file an extension, and then you had to go through the whole rigmarole of why do you file extensions? Well, it's a business partner. And they're like,
Yep.
and so they were like, I don't really believe
And
that.
then they really get into your personal life at that
Oh
point.
yeah, then it really
As
dives
hard as it
in.
is to already get a mortgage, now they want even more information from you.
Yeah, totally. So what happens in your opinion? And I know that you do a lot of business, right? You don't do a lot of personal stuff.
So far as resolution goes, you'd be surprised. I do a lot of both. There's a lot more that goes into business resolution issues because normally those are payroll problems.
Mm,
A company hasn't paid their payroll taxes for several years, and uh, those issues are very involved.
mm,
But we also do a lot of personal. We also do a lot of personal resolution. So personally, if and this is the way it normally moves, if the company could not pay the payroll taxes, there's a portion of those taxes that move to the personal tax return through a civil penalty.
mm.
And so now not only do you have a business problem, you also have a personal problem.
Oh,
So it affects both. So if you own a business, pay your payroll taxes, people, because a portion of the payroll taxes you will be, if you are the owner of the company, you probably will be a responsible party there. So make sure that you do what you need to do to pay those payroll taxes every single month.
so are you an advocate for like a third party company, like an ADP type thing for payroll? And because they automatically withdraw our payroll taxes and pay them for us. So,
I actually am, and we used to have a payroll service in my old company. We did payroll, and we did a lot of people's payroll. You need a third party to do it. It doesn't have to necessarily be one of the larger
mhm,
providers. You need a third party to do it because the laws change so much. Because you have to have forms go into the IRS and to the state every month, every quarter, every year. If you fail to file those on time, there's a lot of penalties.
mm,
So I would encourage you to focus on what you're good at, which is your
right.
business,
Yeah.
and focus on, you need your time and energy focused on getting clients for your company, making more money, becoming more profitable, and things like that. Don't focus on things like bookkeeping and payroll and, you
Mm,
know, should I keep this receipt or not? Have someone help you. I'm a firm believer of having a strong team because, a chain is only as strong as its weakest link.
yeah.
Well, I mean, you're probably an unbelievable technician at what you do.
Hmm.
However, you can't know everything. You need an attorney, you need an insurance person, you need an accountant, you need all these people on your team that are going to be moving toward the same goal for you to be profitable.
Yeah, very true. That's a great point. And um, on the personal side, if you get a letter and it says, "Hey, your taxes were wrong," you actually should be you owe us an additional $1,000. is that something you even fight, or are you just like, okay, whatever, it's, you know, $1,000, like, just
It depends on how complicated it is. We don't usually take clients on unless they owe more than $15,000, strictly because there's got to be a reason for why you pay someone else to do it. If I've had some people do this, they owe a couple $1,000s and they say, look, I would rather pay you to fight this because I know that I don't owe it and I don't want to pay them anything. And it becomes a
precedent.
challenge to their psyche, their personal, finances are being challenged or whatever.
Yeah.
So it becomes beyond an
They end
issue
up
of
paying you more than what they would have had to pay in taxes.
exactly. And we don't want to do that. We want to add value to people.
So whenever they do, when the IRS does say they do and maybe it's different state versus federal, when they do that initial audit or quick audit maybe, and they say, hey, look, it looks like you actually owe us more, do they immediately go the next 2 years or the next, or do they just say, okay, we're just going to focus on this year that we've
so let's say that they audit you for 2018.
Mhm.
That you just get an audit for 2018, and let's say that you did it yourself, you didn't get professional help, and you ended up owing an additional $30,000 in taxes. They're going to go back to 17, and they're going to audit 17, and then they're going to audit 19 as well if you filed it. And they're going to do that almost every time. If there are substantial changes, I consider $30,000 a substantial change. If there are substantial changes, they're going to open other years, and they have the right to.
Mhm.
So don't think that you can come back and say, oh, you don't have this right. The other thing is this right here. If you misstate your income by 20% or more, they'll go back 6 years.
Oh, wow.
Yeah. So let's say, for example, that, and this happens more times than you would believe. Let's say that you got audited for 18 and you didn't do your bookkeeping. You just sort of winged it. And you got
that never happens.
No, never. No. No one ever does that, right?
No. Or
so
do
you got
like
your
the month of, like,
no.
We're gonna do all of our taxes or all of our months or all of our bookkeeping this month.
That's right. And let's say that you only put your 1099 down and you didn't put any other income that you got. So, one company sent you a 1099 and one company didn't. And let's say that you underreported your income by $100,000 because you just didn't report the second W-2 because they had 1099 because they didn't give you one, right? How's the IRS going to know, right? I mean, yeah, you didn't get all the 1099s. How's the IRS going to know if you made more money, huh?
Yeah.
Well, they pull your bank statements and they look at your deposits and how much money you put into your bank account, right? So that's how they figure it out. And then they say, oh, well, you didn't report that $100,000. Now we're going to go back 6 years. Okay. And that's well within their rights.
So what happens if I know we're doing a lot of what ifs, but you've seen a lot of crazy stuff.
Oh yeah, I've seen a lot.
So what happens if we do subcontracting work for another company and we're not the best at bookkeeping, and we just go basically, like you said, every 1099 that they mailed us. And so we got our stack of 1099s, and that's the only income that we reported, and not even taking into consideration any of the homeowners that we did and all that other stuff. So just going off the 1099s, but then somebody comes in later and adjusts their 1099 and like, so two folds there. What happens if you did keep good records and you did all your stuff and they reported a 1099 that was wrong? Do you get in trouble for that, or do they get in trouble for it? And then the other, if you just reported the 1099s that they gave you and then you come back later and they found that they made a mistake and had to fix it, you get penalized for that one too.
So I would tell you, number one, if you're not doing proper bookkeeping, you're asking for an audit. Okay. You're asking for the IRS to question you. The reason why is, look, you would not believe how many tax returns I get that I look at and I'm like, are you kidding me? Because I'll look at it, they'll only report their 1099s, and then every single expense will end in a zero or will end in a
Yeah.
five.
Like
You
how
know,
often is
they
that,
had
man?
like every single thing, like $1,200, $1,400, it's all even. I'm like,
Right.
there's no way, people. And the IRS absolutely knows. So what happens is the IRS, they have a matching program. Okay. So that means that the computer will take your 1099s and match what you reported.
Mhm.
Okay. And if you report more than what the 1099s are, which normally you should do,
Mhm.
if you receive that other income, report all your income, by the way,
Yeah.
um, then it's no big deal. But if the IRS sees that um, you reported less than what your 1099s were, let's say that company did amend that 1099 and they didn't give you a copy of that amended 1099.
Mhm.
Well, if you reported all your income, it doesn't matter.
Right.
But if you only reported that 1099, the original non-corrected 1099, and they changed it and didn't give you a copy, or it got lost in the mail,
Mhm.
then you're going to get an audit.
Mm.
And if it doesn't match, or if you don't report more, it's going to be a letter audit. When that means that, hey, this didn't match. Tell me why.
Mm.
Okay, every single time. And then the more you get there, what will happen is you'll get human eyes on it more than just the matching program for the computer.
Mm.
And then the other thing that the computer does is every single line item has a number, right? So the computer matches all of those line items for that code, that industry code that you have.
Yeah.
And they say, okay, well, in this industry code, 12% of your income should be X,
Mhm.
should be advertising.
Right.
And if you reported 70%,
Yeah.
well, that's going to be a red flag.
Yeah. You
We've
must be
always
trying
heard
to
you're going to
expand a
get
little
red
bit.
flagged for that. That's
Yeah.
that's exactly what it is.
Red flag. Gotcha. Gotcha.
That, and the red flag program, and let me tell you what that is. That's something called the DIF program in the IRS, and it's computer based, and it does exactly what I said. It compares your tax return to the industry average for that industry. And every single tax return has that industry code on it. And it's called an NAICS code.
Mm.
Um, so understand that the IRS is just gathering data and gathering data, and it just rolls all into the computers, and the computers do it, man. And when we go to a cashless society one day, there's not going to be any more of this, trying to hide under the table and all this kind of stuff. It's going to be a rude awakening for a lot of people.
Absolutely. Yeah. And then not even to mention like getting paid cash, but then to pay cash. So your payroll
Yeah, I mean,
taxes are going to go. I mean, there's no more
I
hiding
mean,
that.
if you get money from Venmo or PayPal or Cabbage or whatever, however Swipe, however it is that you get paid from your clients, the IRS gets a copy of that. They're going to get it. The IRS can pull your bank statements at any time they want to. They know where you bank, people. Don't try to go and hide. There is no hiding from Uncle Sam. He has very broad reaching arms. It's really amazing the authority
Mhm.
that they have, and what they can actually do and go and look at and get and see.
Yeah. Cool, Ben. It's been great. Uh, this conversation is always it's a tricky one, and I'm sure there's going to be people that have more questions and have issues personally that they have to deal with, especially now. Hopefully you filed your extension. So if they want to reach out to you to learn more or to get help from you, what's the best way for that to happen?
Yeah, they can check me out on my website. It's www.goldentaxrelief.com. That's goldentaxrelief.com. And my name is Ben. My telephone number is 844-229-8936. Once again, that's 844-229-8936.
Cool. Thank you for coming on the show today.
if I can leave you with
Yeah.
one or two little tips, okay? Make sure, number one, even if you owe money to the IRS, you file your taxes. Okay, so always file your taxes, because the failure to file penalties are absolutely huge. If you have not done an extension for your 2019 taxes, today is the day you can extend them another 3 months, right?
And
a
then you're going to
whole
be like the day that they're
a whole
due
90
at night
days.
working.
And then the second thing is number one, file your taxes, and number two, if you get a letter from the IRS, find a professional to talk about what the next step is for you, because you don't want to represent yourself. I don't ever suggest talking to the IRS by yourself, because you never know what they're trying to get from you.
Mm,
I talked to a client, I talked to a prospect 2 days ago,
mhm.
and he said, "Yeah, I interviewed by the IRS, and when I came out of the interview, they said that I had to, all of my subcontractors now had to be employees, and they just changed everything."
Oh, yeah.
And I was like, "Oh my God, are you serious?" He's like, "Yeah, I don't know what that means." So he sent me the notices yesterday,
Yeah.
and I looked at him, and he owes like $100,000 for payroll taxes that he paid his subs.
Yeah. So the subs aren't paying it. Now he's paying it.
Now he's got to pay it. That's right. And it's very difficult. Once that gets
Mm,
assessed, it's very difficult to fight it.
yep.
So that's the perfect example of, you know, if the police come to your house and pull you out of your house and
Uh,
set you in that room with the mirror, like we were talking about,
mhm.
the first thing you do is call your attorney. You don't even talk to anybody, right? That's what I would do.
Right.
I mean, I don't care if they want to ask me what I had for lunch. I'm like, You can talk to my attorney."
Mhm.
Same way, you don't want to talk to the IRS, because they are trained to get more information out of you. And I'm going to tell you real quick, if you sit down in front of the IRS, I don't know if you ever have, but it's really scary, and people just
Don't
let it
talk.
fly. They
Oh,
just tell
yeah.
everything. They tell their life
Diarrhea
story.
of the mouth.
Exactly. I mean, they tell their life story from, when I was 2 years old, I fell in the sandbox. They start there. So, um, get a professional, and if they don't understand
Yeah.
um, the questions that the IRS is asking, talk to more than one.
Yeah. Cool, man. I appreciate it. It's been great.
All right,
Cool,
I
man.
appreciate it.
So if anybody has any questions, don't hesitate to reach out. Reach out to Ben. Reach out to myself. I'll connect you with Ben. And with that being said, thank you again for listening to or watching Service Business Mastery Podcast, the podcast focused on service business owners, managers, and technicians who are considering becoming business owners themselves. Until we talk again next week, have a wonderful day.